Hello everyone and welcome back to our podcast on crypto and blockchain. I'm Jane.
And I'm Nike.
Today we have some interesting news to discuss. Coinbase, the largest crypto exchange in the United States, has received a Wells notice from the Securities and Exchange Commission. The Securities and Exchange Commission issued crypto exchange Coinbase a Wells notice, warning the company that it identified potential violations of U.S. securities law.
That's right. This is not the first time the SEC has come down on the crypto industry. Just last month, stablecoin issuer Paxos received its own legal threat. Some industry experts predict that there could be more to come.
This regulatory action has sparked a lot of discussion about the future of crypto in the United States.
Absolutely. Mati Greenspan, the chief of crypto research firm Quantum Economics, believes that U.S. regulators have been unfriendly to crypto since the beginning.
And some believe that the recent collapses of crypto and startup-friendly banks, including Silvergate, Silicon Valley Bank, and Signature Bank, are part of a scheme by regulators to unbank the crypto sector, dubbed Operation Choke Point 2.0.
It's clear that the United States is cracking down on cryptocurrencies and crypto firms, but is this a good thing? Adrian Przelezny, CEO of Australian crypto exchange Independent Reserve, thinks otherwise.
That's right. Przelezny believes that the recent banking sector woes were not due to any failure in crypto but caused by banks managing their risks in an irresponsible way.
He goes on to say that the adversarial environment for the crypto industry in the U.S. would push the related jobs, investment, and future innovation offshore.
And Przelezny thinks that Singapore, Hong Kong, and potentially Australia may prove to be a better home for the crypto industry, and those countries will reap the economic benefits.
But what about the United States? Could a crackdown on crypto in the U.S. actually have the opposite effect on the dollar's dominance in global trade?
That's an interesting point, Nike. Mati Greenspan warns that the surgical removal of cryptocurrencies from the U.S. banking system will only isolate the United States further and weaken the dollar's position as the global reserve currency.
Michael Bakina, a lawyer and partner at Piper Alderman, agrees that a regulation by enforcement model would drive crypto asset innovation offshore.
He points out that offshore jurisdictions would continue to harbor crypto firms until governments lay out the path to regulatory compliance, which will cost jobs and raise the risk for consumers and investors.
It's clear that there's a lot at stake here, and the United States needs to carefully consider the implications of its regulatory actions on the future of crypto and blockchain innovation.
By the way, Tether's chief technology officer, Paolo Ardoino, has claimed that USDT is becoming the safest asset to hold in the world.
Yes. According to Ardoino, USDT is now the safest asset to hold because the company is different from banks based on the fractional reserve model. In the U.S. banking system, banks like Silicon Valley Bank, SVB, are collapsing due to problems with the fractional reserve model.
That's right. Tether's approach to their reserves is different. They cut their commercial paper backing last year and eventually reduced it to zero by late 2022. Instead, they invested in U.S. Treasury bills.
And it seems like that approach is paying off. Tether is expecting to make a $700 million profit in the first quarter of 2023, matching the profits of the last quarter of 2022. That's huge.
It certainly is. And Ardoino added that Tether also has an addition to that $950 million on December 31, 2022. This means that the company's equity will grow to $1.5 billion or $1.7 billion on top of the reserves that they have, which are backing 100% of the assets.
Wow, that's impressive. It's no wonder that USDT's market capitalization has added about $8 billion since February 28, and it's now at its highest level since May 2022, according to data from CoinGecko.
Yes, Tether's market dominance is increasing, and it seems like USDT is becoming more and more popular. But with this growth comes increased scrutiny from regulators, and Tether has faced criticism in the past over the lack of transparency regarding its reserves.
That's true. However, With Tether's profits and the growing demand for USDT, it will be interesting to see how the company continues to evolve and adapt to the changing landscape of the cryptocurrency market.
Absolutely. And with the ongoing banking crisis, it's no surprise that investors are looking for safe assets to hold. USDT might just be the answer to their problems. And yesterday, we talked about the Arbitrum airdrop, and today we have some analytics about it. Defi Ignas on Twitter provided us with some fascinating insights.
Yes, the Arbitrum airdrop has set some new records. It's a big deal in the crypto world. The first record it broke was for the most transactions ever. The daily transactions on Arbitrum were 3 times more than Ethereum. That's a significant number considering Ethereum is the second largest cryptocurrency by market capitalization.
It's impressive to see how much Arbitrum has grown in such a short period. The OP airdrop launch had 270,000 transactions, while the ARB launch has already surpassed that with 611,000 active addresses. That's an astonishing figure.
Another record that the airdrop broke was the weekly revenue, which reached 908 ETH or $1.6 million in just 12 hours. That's a lot of money.
That's right, Nike. However, the launch also faced some challenges. There were stuck transactions, high gas fees, and RPC limits that were exceeded. As of writing, Arbitrum's gas fees are 2x higher than usual at $0.65. But it's not as high as the previous Arbitrum record when Odyssey launched.
Despite the challenges, the airdrop was a massive success. The number of wallets that claim the airdrop is currently at 429,000, accounting for 70% of all airdrop distribution supply. That's a huge number.
Uniswap's Uni was the largest airdrop with around 250,000 recipients. But the Arbitrum airdrop has already surpassed that number. It's incredible to see how much the crypto world is growing.
Another interesting statistic is that 4% of the total ARB supply is deposited on exchanges, including DEX liquidity pools. Binance has the most ARB deposited, followed by OKX and KuCoin.
This data shows that the Arbitrum airdrop has been successful, and people are interested in it. Okay, and today we're going to be talking about Chainlink, a decentralized Oracle network. So, Nike, what do you think are some of the key features of Chainlink?
Well, Chainlink provides a secure and reliable way to connect smart contracts with data outside of the blockchain. This means that smart contracts can access real-world data, such as price feeds, without the need for an intermediary. This is a really important feature because it allows for more advanced and sophisticated smart contracts to be created.
That sounds really interesting. What are some of the potential pros and cons of using Chainlink?
One of the biggest pros of Chainlink is its decentralized nature, which makes it more secure and resistant to single points of failure. Additionally, Chainlink has a track record of successfully connecting smart contracts with real-world data, which makes it a trusted and reliable Oracle solution. Finally, Chainlink has a strong community of developers working on various projects, which can lead to innovation and new use cases for the technology. However, there are also some potential cons to using Chainlink. For example, its complexity can make it challenging for developers to implement and use. Additionally, like all cryptocurrencies or blockchain-based technologies, there is always the risk of volatility and unpredictable market conditions. Finally, there may be concerns around the security of smart contracts that rely on external data sources, as the reliability and accuracy of those sources cannot always be guaranteed.
That's a really balanced view. So, how can people earn on Chainlink?
One way to earn on Chainlink is to use Link tokens to pay for Oracle services. This can be a lucrative business for node operators who provide high-quality data feeds to smart contracts. Additionally, Link tokens can also potentially earn yield through exchanges and DeFi/SuFi lending services.
That's really interesting. So, do you think Chainlink is a technology that will be widely adopted in the future?
Absolutely. With the rise of decentralized finance and the increasing demand for smart contracts that can interact with the real world, I think Chainlink has a really bright future. It's already being used by some of the biggest names in the industry, and I expect that trend to continue.
Well, that's all the time we have for today. Thank you for listening to our podcast, and we'll be back soon with more insights into the world of blockchain technology.